Okay, so you're about to trade, but you are scared. You are scared of losing and you are scared of trading, but you want to make money. So what do you do? So I would say, again, these videos are journaling. This is my, for me, it's for me to journal. This is my journals. So everything is based on my perspective and my views. Might not be the fact, might be the fact. I don't know, but my general views of trading. How do you overcome fear and the fear of trading, the fear of losing, the fear of failing when you want to trade and you want to achieve a goal? Number one, you need to understand that to achieve your goal, you need to actually trade. That's number one. You need to actually trade. If you want to box, you need to actually fight. If you want to join the military, you need to use a gun. Now, this is from a direct perspective, from a verbal perspective, not necessarily a realistic perspective. But in order to make money in trading, you need to trade. So the fears that you need to remove, the variables that you need to remove are the pains around trading. What in trading brings that pain? And to my understanding is ability and result. You don't trust your ability and you don't have proof of result that you can do this. Now, how do you get this? Now, in trading, the good thing about it is nothing about trading is based on the past. The only thing that's based on the past is blueprints and your journaling your ideas and journaling your perspectives and directions. But in terms of result, nothing is based on the past. Everything is created as you move. And you understand this point. I'll understand this point as I go further into the video. But to remove fear from trading, first you need to understand the duty, which is, in order for me to achieve my goal, I have to trade. Whether I like it or not, I have to trade. So my fear is around the act of trading. What about trading makes me scared? My failure to read the charts. Is it my failure to understand what I'm trading? Is it my failure to interact with what I'm trading with? Sometimes it's even your funding intervals. What if you're funding too small? What if you're funding less often? What if you're funding during periods where the market is bad? Again, that falls under bad interpretation of data, lack of skill. So we're going to go into a brief chat about that you are afraid of failing and losing because, one, you're probably attached to your account. Attached to your account is you're attached to result, but you're attached to the wrong type of result. Here's the thing. Your account is meant to fluctuate. It's just an entry point for you to achieve your goal. Like I said, everything in trading is made as you go. Nothing in the past can help you, can make you money, but everything in the present and the future can. So if you play the game well today, let's say I fund today, and this would be my mindset if I was to trade today. I would fund, as scared as I am. I know the thing that I should be looking at is ability and result. How would I improve my skill, ability, and my result outcome, which is profit, every day, including today, in order to achieve my goal? So I fund today. The mindset is, I'm afraid to lose. Why am I afraid to lose? You only lose because of three things. Because, one, you over-leveraged. Over-leveraging is not a certain loss. Understand perspective, understand intention of your leverage. If you over-leverage understanding your intention, even if you blow, that's a good trade. But if you over-leverage not understanding your perspective, even if you win, that's a bad trade. Because eventually, you want to give it back. Okay, let's not even be negative about it. It's just general facts, general perspectives. So what would I do? I would understand that, one, over leveraging is one of the main issues when it comes to trading. Over leveraging doesn't accelerate result, it accelerates profit. The result is the trade, how the trade plays out. Profit is something entirely different. Profit can be made through a trade and can be made through leverage. Number two, FOMO, trading too early or too late. There is no such thing as FOMO from a perspective of a skilled trader, because we understand that we trade the same thing. Certain patterns have specific outcomes, and those specific outcomes have certain sequences. These sequences repeat themselves. Now, you won't understand them if you juggle time frames. The easiest way to do this is to isolate time frames. I'm trying to put as much information as possible without derailing from the point. I find myself derailing from the point from time to time. But yeah, isolate time frames in order to understand what the structure of that frame is, or what the trade is. To one structure, one stop loss per time frame. That's just a pointer within the point I'm trying to make, which is there's no such thing as FOMO. There's no such thing as FOMO because everything happens when it's supposed to happen in the market. The only thing is timing. The market, you don't create signals. You don't discover signals. They are just there. Whether you're in the market or not, today, if the market decided to give a W at 8 a.m., and I'm being specific about the time because that's how it works. Everything happens at a specific time. That's why timing is important, and that's why there's no such thing as FOMO. You decided to take a trade at 12 p.m. because you saw that this is derived from a specific pattern. That means this is momentum. Forgetting that every point in the market is 50-50 at every time frame. In every time frame, every time, every strategy, every entry, it's 50-50. And then you get smoked. You get smoked and you blame the trade. No, you were just late. You were just in a trade that's not what you are explaining right now. Yes, explain that this point is derived from that W, but from here on in, based on what is and could be, this is the structure, and what could be is this, and can I handle it? Then you overcome FOMO. Lastly is unfamiliarity. Trades that you don't understand and you don't know. We trade the same thing, but just because we trade the same thing, it doesn't mean you know it. You know what I'm saying? We might trade the same thing, but you might not know this trade. Have multiple strategies. List them out, because the market differs on different days, and your goal is to actually make money at the end of the day. Now, that's another pointer within the point that I'm making. The overall point of this is you don't want to be over leveraging, regardless of your strategies and how much money you want to make on a day-to-day basis. The goal is ease. Improve your ability and improve your handling of things in the market. Improve your result, certainly. So you want to improve your ability and your result. So if you want to do that, you reduce leverage. You find trades that pay based on movement instead based on leverage again, which is time frames, trades on larger time frames, trades like the H1, H4, the daily, the weekly. Regardless of the lot size that you use, you get paid, and trades taken in those particular time frames consistently create confidence. Confidence is your ability to interact with the market. You are afraid of losing, you're afraid of failing, because you feel like you are unable to interact with the market. You don't have the ability to do what it takes to achieve your goal. Not realizing it's all about removing as much variables as possible in order to get closer to your goal. Trading is already confusing on its own, not because of the charts, but because of everything around it. You achieve a goal, then tomorrow you want to try it again and you fail. Why? Because absence of work. You think that just because you achieved it, that tomorrow when you do it again, it's a certainty. No. That's why we say processes. Your processes remind you of how you did it, so you don't have that mindset of entitlement or, expectations from the market, but you expect from yourself. So you're also fearful because you expect from the market instead of expect from yourself. The only thing you need to expect from the market is that it will deliver price. It will deliver the signal the way it should be. You should expect everything else from yourself, that I'm going to risk accordingly. I'm going to take advantage of the market and I'm going to win this trade and the next trade and the next trade and the next trade. Why? Because today and going forward are the only things that have power over my account. Yesterday is nothing, but today, tomorrow, I don't know what's there, but I know I'm going to handle it. So you also have to have a mindset. Besides these three elements, trading trades that you understand, and you understand them based on boxing in the day and isolating timeframes on that day, trying to move your account, move it towards a positive needle. You remove over leveraging by utilizing timeframes that you use movement instead of leverage in order to make you profit, in order for you to build confidence to know that I did this, tomorrow I can do it again. Plus, these easy wins create an easy route to your goal. They create an easier perspective towards your goal, making you understand that you don't need to leverage in order to achieve your goal. You can make trading an easy job, but just because it's easy doesn't mean work is absent. You still have to work hard. You coming in every day and measuring risk and looking at the diagrams of price is skill. Then lastly, over leverage, unfamiliarity, and FOMO. You fix FOMO by timing. Be honest. What is the market saying? What is on your screen and what could result from what is there? And that's how you gauge that specific area. And then you understand your situation. Am I funding too small? Am I funding less often? If that's the case, understand that the market works in different ways. You don't need to be interacting with that specific time frame, and understand that your intervals affect the interactions of signals. If you fail to fund from January until July, you miss like 6-7 months of market structure that could have paid you. But you shouldn't be worried about that, because from now going forward, you can still get paid. Yeah. So I wanted to talk about overcoming fear and failing. Oh, lastly, blowing is normal. Your account will either tip to blowing or tip to growing. And growing has two phases to it. It's either you want to shoot, meaning your account is going to move significantly faster because of maybe your skill, maybe the market's depiction of price, maybe your account size, timing again. Or two, it's going to grow, maybe because you're using a more progressive method, or the market is just too challenging and you have to acknowledge that it's challenging, but I'm still making progress. So traders beat themselves up whenever the market is challenging because they've had easier months. No, you are still a good trader. You are moving towards your goal. You're not blowing. You're not tipping your account towards the negative scale. So look at that. Understand that blowing is normal, but you want to try your best to make it not blow, to make it successful. Because there's no absence of work in trading just because you're a successful trader. But there is overcoming of challenges. Some of your systems have to be situational, kind of like creating challenges. Creating challenges is a system, is a system that's based on situation outside your situation. That's within the trading situation. I don't know how to explain it, but it's like this. You have your strategies, you have your ways to make money, your attempt, your perspectives. Then you have the understanding that, larger time frames do pay you regardless of the risk. Smaller time frames need to work in an interactive manner, fast and quick, in order to boost your profit. These are elements that can boost confidence outside your strategy, outside your confidence, which are certainties. But these certainties, they don't want you to do them always, because, again, trading requires strategy, sometimes intuition. I don't want to say intuition, but you just have a sense that, no, I can see this market. This market is tripping. But if you actually pay enough attention, everything has numerical data points. Everything can be accounted for in the market. Isolation before combination. That's what I believe in when it comes to timeframes. Isolate your timeframes and understand if there's a trade and understand the structure before you can combine and choose biases, because each individual timeframe can pay you. If you use a smaller slot size continuously, even if you juggle the timeframes, you're a winning trader because you are tipping towards the positive. There's nothing to fear. You will blow. It's normal. I'm attached to time. So whenever I blow, it hits me hard because I don't want to waste time, because time is money in the market. And now if I wasted 9 days or 30 days or 60 days growing an account and I blow, that's bad. And that's because trading is my main source of income. So yeah,